accounts and finance from like budgeting and the revenue assurance I'm handling. By profession, I'm chartered accountant and pursuing a US CPA. And I have a you can say that they have experience about the income tax, because being a profession of the chartered accountancy, that these are the things by blood we have, that whatever amounts need to save for the client, or maybe for the in relatives, or maybe friends and families. So that's why we discussed with the puja, and then found that we can also arrange a session for our team members as well. So this is the last month where we can save our tax. But you can also see like some optimistic view about the next financial as well. Like already budget got passed for this financial year, so there is no change for the next financial year. So like you can say that the whatever section and whatever options are available for a to save the tax, so we can save the tax by I'm just not give you any magic tricks or any uh, giving you that wow moment that like everybody can save the tax. These are the section where you can save your tax. Let's give you one example. If one like child came to me and asked me that how much what like 2 plus 2, then I said 4. Then he again went to the go to the one of the engineer, and he asked, oh, how much 2 plus 2. Then engineer said, yeah, it's 4. But then after he went to the chartered accountant and asked that how much 2 plus 2. Then chartered accountant asked give you the answer like how much you want. Like you can just connect with that, chartered accountant always play with the numbers. So I'm not criticizing anything any about this chartered accountant, but they are very good in it, to how you can save your tax and how you can discuss with the whatever options are available, and you can save your tax. Personally, I believe that everyone should pay tax if it is because if you're paying a tax on a time to government, then you can also enjoy some other benefit like infrastructure, hospitality, and some other necessary service like government providing. So my always objective you can pay tax if you are in a tax lab. So let's start the session by just discussing that everybody aware about the term salary. So why I'm saying this thing, every starting of the financial year, every have some things in their mind, like how to, because HR directly mail or accounts department directly send a reminder to all employees, like you have to submit the declaration, you have to submit these things. That time you feel that why they are asking. So here I have the answer about that. Government and the income tax department have given the responsibility to employer. Like if they are not satisfied their responsibilities towards to declaration and checking the proofs of the all the employees, they might get a notice from the income tax department. If some employees not provided their proof on a time, or maybe they are not fulfilling the requirements whatever the raised by the accounts department. So don't think like they are worried about the company, and they also worried about you as well. So like whenever you receive the reminders from your accounts department, don't consider as a in a negative way, because they are here to save your tax, and they are help you out to how much tax you can save with the different option. Like many time I sit with next to Krina, and Krina is sent the mails to employees, and that time I feel that some peoples are very much supportive, whereas some peoples are very much negative about that, and they are not responding on a time. So we are here to just fulfilling the responsibilities of like what employer needs to be fulfilling towards the income tax department, right? So these are the things you must aware, and you are receiving the mails from the accounts department. Let's more discuss about the salary part. In income tax department, and the government will earn the revenue from your taxes, corporate taxes, you can say the GST, and the direct tax, it is a income tax. So whatever amount you earn during the financial year, you have to pay the tax and you have to report that particular financial, like your salary income. Like you can say that the whatever amount you receive in your bank account on a monthly basis, on a monthly date, you can say that on a 7th or maybe on a first date of the month, into 12, it is your taxable income under the income tax. But it's only the you can say that it is not taxable income, but after you have so many exemption and the deduction available, you can save your tax. So like you can say that the salary, it is available. Sometimes what happens, many employers like promise to, we will pay some amount in your this financial year, but might possible they will not pay you on this financial year. So it should be not your income for that particular financial year. So whatever amount you receive in your bank, it's your taxable income, it's your earning. So I'm here clearing that whatever amount is under the provision, or maybe in a like employer give you the, like we will provide you the bonus, we will provide you the incentive. These are the things not come into picture where you are calculating your taxable income. Whatever amount you receive, it's your income, right? So many of like colleagues are not aware about the financial year and the assessment year. I'll give you the simple idea about that. Whatever amount you earn during the financial year, let me share my screen and then you will understand, like, just a moment. You can see that my screen in Excel. Your financial year should be starting from the April 2020 and ends with the March 2021. So in an income tax department have a like you can say that the policy, you need to report whatever amount you earn during this financial year to income tax department in a specified date. So specified date should be like before 31st July. It's you can say that you have to report all your taxable income and you have to file the income tax return before July 31st. Means like your financial year ends with the March 21, then after you have almost 4 months are with you, like you can file your income tax return to the income tax department. And what is assessment year? So you can say that whatever amount you report in the month of July, so income tax department have a time, like whatever amount you reported to income tax department, they will assess and they will investigate your data, whatever, whether it is right or whether it is wrong. So you can say that it's an assessment year. So you might come across some situation like you might have confusion like that, what is financial year and what is assessment year. So I'm giving you the simple idea that whatever salary you earn that during the financial year, it is your financial year, and assessment year should be ahead of your financial year. So you can say that the 2021 is my financial year, then my assessment year would be 21-22. So these are the thing. It is a, like it's a normal basic thing. Might some of the are aware and might some people are not aware about that, but I'm here that make you very simplified the session, like everybody understand, because when comes to income tax, everybody scratch your head and might possible they are like feeling like we don't know about the income tax and we don't know about the some technical and financial jargon. So I'll try to make it this session, it's very simplified way, then every basic a layman person can understand and can save their tax like on a, not this financial year, I'm not sure about this financial year, but I'm pretty much confident about you can save your tax for the next financial year, right? So let's go back to the presentation. You can see that the presentation file. So income tax department has like announced two scheme into the income tax department. Now you can see my screen, you can see that the old tax and the new tax regime. So many are like fail to understand like what does mean and what is the difference between the old tax regime and the new tax regime, right? So I'll give you the basic understanding in a very simple way. Like if you are recently graduated and you are earning some amount of money like more than 5 lakh rupees, and then you're not started any investing and you're not taken any loan or anything amount dependent on you, like you are not that much responsible for anything in your for your family. So you can directly enroll yourself in a new tax regime. Why? Because under the new tax regime you don't want to pay much higher tax, because under the new tax regime our financial minister Nirmala Sitharaman has provided you some low tax rate option where you can pay the nominal rate of tax, and you can simply pay your tax to the government, and no need to you can say that no need to put in a your situation, put yourself into like providing the insurance receipt, rent receipt, and you have to invest somewhere. Or maybe you want like, I don't want to pay anything, or I don't want to invest anything to, because I need money for my consumption or for my spending, so I don't want to invest any single amount to save the tax, right? Or maybe you find like that this is not the right time I can invest, so I need to consume or spend more money into some like education or maybe some other things you can incur. So under the new tax regime, if you enroll yourself, then you don't have any single amount of deduction or exemption available. So like you can compare yourself new tax to old tax, where old tax regime you can get a benefit of multiple options, but whereas in a new tax regime you don't have any single amount of benefits available. So if you have already invested some of amount of money in a mutual funds, you can say that you already buy LIC, or maybe you already purchased or taken a home loan, then I'll not suggest to go with the new tax. But however, I also suggest that if your taxable income is more than 10 to 15 lakh, 10 up to 10, more than 10 to 15 lakh, so you can have a benefit of the income tax slab. You can say that the on my screen, if your annual salary is more than 7 lakh 50,000, 10 lakh, under the old tax regime you have to pay 20%, but whereas under the new tax regime you have to pay 15% tax. So you can save your 5% tax, and then you don't want to pay or don't want to incur any amount in respect to save your tax. So I'm hoping that you are all aware about the, and you have a basic information about the old tax and the new tax regime. I'll give you the basic example on it, whereas you can see that Donald has earning a 9 lakh rupees per
Uh,
annum.
Reen,
And
sorry to interrupt. Actually, your screen is still stuck. So can you like I
now,
can only see the Excel sheet, the one which you shared initially. Yeah.
just
So
a
can you
minute.
share again? Yeah. Sorry. Yeah.
Thank you, Karan, because many people are not also seeing the same thing. Now you can see that the income tax slab, old tax regime and the new tax regime. Now you can see that I'm again going back to, because screen is not visible. If someone earning 7 lakh 50,000 to 10 lakh rupees, so he or she has to pay 20% tax on that particular amount. Whereas under the new tax regime, you have to pay only 15% tax. So you can save your 5% tax, and you don't want to pay anything or don't want to invest anything, and you can just simply pay 15% tax to the government. So I'll give you the one example. You can see that the Donald has a gross salary 9 lakh rupees per year, whereas Daisy has a gross salary is 7 lakh 50,000. So let's understand, if Donald go with the new scheme and Daisy we go with the old scheme, how much tax he or she can save. So now you can see that Donald taxable income is 9 lakh. Let's say it's not the perfect amount or absolute amount. It might be increasing, it might be reducing, because some exemptions are also there. So you can say that the Donald's taxable income is 9 lakh. But if we enroll and if we go with the old scheme, and right now we are not discussing any exemption, but simply just calculate the taxable income, then you can say that the under the old regime, Donald has to pay 96,200 tax towards to the government. But under the new scheme, he has to pay only 62,400. Same thing for a Daisy. If he Daisy go with the old scheme, he she has to pay 65,000 for a tax. And the same time, if she enrolls in a new scheme, she has to pay 39,000. So everybody understand that the income tax slab, I'm going back to the slab and give you the much information about the income tax slab. So if some earns like from 0 to 2 lakh 50,000, there is no tax. And someone is a super citizen or senior citizen, they have a liability, like they have a limit up to 3 lakh. So if they are earning up to 3 lakhs, they don't want to pay any tax to the government. But then after, if someone earns more than 2 lakh 50,000, even you earn more than 10 rupees from the 2 lakh 50,000, you have to pay 5% tax on it, right? So understand the tax slab how it works. So if you earning like, let's say 5 lakh 40,000, so for the first slab you have to pay nil tax. I'm just discussing about the old tax regime. So you can see that the 2 lakh 50,000 to 5 lakh, so you have to pay 5% on it. So let's say I'm earning a for 5 lakh 40,000. So 5 lakh, I onto 5% I have to pay tax. Then after 40,000 I have to pay tax on a 20% because I am reaching and exceeding the limit of 5 lakh. So it should be in a next slab. So 40,000 should be charged on a 20% tax slab. So you can just understand the amount and as the slab wise, and you can go with the more than like any other example you can want. So I give you the example 5 lakh 40,000. So for the second slab I have to pay 5%, and the second slab for the 5 lakh to 7 lakh 50,000, you can say I have to pay 20%. So 40,000 into 20% and the 5 lakh into 5%, my taxable income and my tax liability should be total of that two slab, like total of the second slab and the third slab. So these are the things like income tax slab, you can calculate your taxable income if you want by own. So you can also, like, there is not any rocket science, there is a mathematics behind it. You just follow the mathematics and then you can get your taxable income. Because nowadays many finance professional, what they are doing and they are misguiding and manipulating your data, and like feel you like they are doing very more thing on a in your financial return, or maybe anything that like I'm the person who knows each and everything about the your tax return, and they might you charge more than, like you can say that the many times finance professional charging more amount for the filing the taxes and return. So I'll suggest, like, so many videos and so many data are available on Google. You can just understand the basic behind that, and then you can file your return by own. So you don't want to pay or don't want to depend on any financial professional. These are the things against my financial profession, because I am the one or maybe another CA person always encouraged, like, you don't want to pay your tax return by own because we are there, we are here to help you out. But I always suggest, whatever things you are earning, like, you also aware that whatever earnings are, it's my hard cash money. I don't want to pay someone like for just filing the return and just reporting the amount that you already have. So these are the things you need to learn. First, and the foremost of the tax benefits you can avail, it's your professional tax. Like, you can also see that the uh, 200 rupees per month you have in your pay slip. So you can say that the 200 rupees deducted from the employer, but it's no never go waste. You can get a benefit of rupees 200, like 2,400 per year. So now you can see that my taxable income under the old regime, 8,97,600 after deducting the professional tax, right? But under the new scheme, I am not eligible to get the benefit of professional tax. So I have to pay the tax on a 9 lakh rupees, right? So now going the next slide, now you can see that the Provident Fund. Provident Fund normally covers under the section 80C. Here I'm not saying any section, because if you heard about the section, might possible that you cannot relate with the section. But I can give you the benefits about it. Like, you can save your tax. Like, under the PF, you have to pay some amount of portion, like 12% portion you have to pay from your salary, and 12% from your employer will contribute against your contribution, right? So 12% of your salary is already you have earned, so you have to pay the tax. But whatever amount your employers paid behalf of you, that is your exemption amount, you can get a benefit out of it. So let's say if you have the option of PF, so normally people can avail the benefit of 21,600 PF option, and they don't want to pay any tax on that particular amount. So now you can see that the difference between a not in a PF and opted for a PF under the case of Daisy, you can see that the Daisy has a tax deduction option after professional tax and the provident fund, right? So now Daisy has to pay the tax on a 7,26,000. So Daisy has an option to save the tax about 21,600 because she has availed the provident fund option, right? So in a provident case, your amount is safe and you will get the interest on it, you will save your tax, and these are the amount it should be added by the employer. So it's a double benefit you can avail. Like you can also withdraw that particular amount after some of the years. Sometimes in a COVID, many people withdraw their PF because of some reason or because of layoff. So it's, and the next recent survey you can get interest rate about 8 to 8.1%. So these are the thing you will not get in your bank account or any saving account. But if you invest some of your money in a PF, that it's help you because it's compounding interest. And after the years, if you're paying monthly 1800, like 1,800 rupees per month, then you just think about that, you save your tax, you also get your return, as well as you will get your capital back whenever you required. So this is the best option, win-win situation for the taxation part and as well as the investment part. Some portion are available, you have to incur the expense, but you don't want, like you can say that the insurance part, you have to pay the insurance, but in a apart from insurance you will not get anything from the insurance. Like you get the premium, you will get the cover but not get the return. But in the terms of provident fund, you will get the benefit of investment, as well as you will get the benefit of taxable part. You can save your tax up to 21,600. There is no limit, but it's a criteria about the basic salary of 12%. You have to deduct the tax. So 12% of your part and the 13% from your employer. Why 13%? Because total percent is 25%. So your employer contribution towards your provident fund is 13%, 12% goes to your account, and 1.15% is admin charges. So you can also get a benefit of pension as well. So provident fund has so many benefits. You can, and everyone can save your tax, also the investment part, and whenever you required, it's available. Like in a before so many years, many people are facing some difficulties to withdraw the provident fund amount, but now it's a very easy, on a one click away, just to upload your check, and the PF department will disburse that particular amount in your account within a business 7 working days. So there is no hassle to get your provident fund. Everything is all right, and you can save your tax. You can also get a benefit of investment. So this is the PF things. You can save your tax. Now going back next to the another slide where you can have a standard deduction. So what is standard deduction? In a if you are you already doing a job for more than so many years, you also heard about the conveyance expense and the medical expense in your payslip, right? So what does mean, like why they are not you can see in a current payslip? Because government has decided like some of the expense employer like individual has to bear, so they will give you this flat standard deduction. So it covers your medical expense rupees 15,000 and the 16,200 rupees your conveyance expense. So like government always encourage individual, like first of all they are making a policy like we will provide you the benefit as much as we can to the individual, because main crunch of the taxable income they will get from the individual only, right? So they are discussing and they have a like say that roti kapda or makan, everybody understood this language. Like they also give benefits, first of all, like they can save you that standard deduction medical expense. So in a year whatever expense you incurred for the medical bills, in a before announcing this policy you have to submit the all the medical bills to your employer, and then you will get the benefit of your medical expense. But after announcing the standard deduction, you don't want to pay or don't want to submit anything for that particular benefit. So let's say my taxable income is 7,50,000 and I'm getting a deduction of professional tax, it's 2,400. I'm also opting a provident fund 21,600. Then after I have a benefit and I have option to get a like deduction like exemption on 50,000 rupees. So till now my taxable income is 6,76,000, right? So under the standard deduction, you don't want to submit any single document to the employer. Like you don't want to incur any expenses, but whatever expense you incur, you can get a benefit out of it, and you will save the tax rupees 50, on a tax of 50,000 rupees. So now you can see that we will discuss three major component of your salary: professional tax, provident fund, and the standard deduction. Now going to next slide, you can see that the house rent allowance. I said the roti, kapda or makan. We already discussed about the makan. In a first, we'll discuss the makan and then we'll discuss the next two portion. So now you can see that the house rent allowance. So government always have a some things mind in their mind, like if normal individual pay some of the amount to a rent, because major expense of the individual is its income. On income it's rent expense, because almost more than, like you can say that the 25-30% of their expense like taking from the rent expense, right? So government also worried about the individual and they give you the benefit, you can get the benefit of your HRA. So let's I give you the one example, like some technical teams and technical mathematics are behind to calculate your HRA, but nevertheless, like Krina has said, some tax calculator to each and every people. If you want any tax calculator, I already made a draft and I already prepared a tax calculator. If you want, then just ping me, I'll share with you. Then you don't want to pay attention on a mathematics, just put your figures, and end of the Excel sheet you will have the tax liability per month. And you can also play with the numbers, and you can also add the amount, like you can say I have to pay some insurance policy this much, then what is my tax. Like you can like play with the numbers, and you can also check your tax liability without having a financial knowledge about this. Have to put your salaries amount, like whatever salary slip you receive, you have to put on a monthly basis, and then you have a tax liability end of the Excel sheet. So I'll share with you after the session if anyone wants required. So under the house rent allowance, you can see that the whatever house rent allowance your employer paying you on a monthly basis, as per the labor code, every employer has to set that limit. Like basic salary should be 50% of your salary, and the HRA should be 50% of your basic salary. So let's say I'm going back to the one my Excel screen and share you again. Just a moment. Now everybody can see my Excel skill, right? Okay. So now you can see that. Let's go back just a moment. Let's say my annual CTC should be 16 lakh. So my basic salary would be 50% of my total CTC, right? So it should be at 8 lakh. And the HRA should be 4 lakh, because it's 50% of your basic salary. So now I'm going back to the PPT. Just a moment. Now you can see that there is three condition needs to be satisfied to get a benefit of HRA. First is rate, whatever rent you paid minus 10% of your basic. So whatever you earning as a basic salary, 10% of your basic salary you can get, like whatever, like if let's say your rent amount is 20,000 and your salary is 1 lakh basic, so 10% of your basic is 10,000. So 20%, 20,000 you paid as a rent, then minus 10,000, so your amount is 10,000. But here it is not like you have to calculate each and every parameter, like three conditions you have to follow, and then after whatever amount is, like you can say that the lower o of the three component, you can get a benefit of it. So here you can see that the under the lazy case and a daisy scenario, if she has to, like she has paying a rent of 1,20,000 per month, so she can get a benefit out of 82,500. Now you can check that after deducting the HRA, your taxable income should be 5,93,500, right? So you can get a benefit of HRA. Like I'm giving you what sort of documents you need to provide. If your HRA is less than 1 lakh rupees, so you have to pay the rent receipt and the rent agreement to the accounts department. And by simply providing and sharing the documents with them, you can get a benefit of HRA. And if your rent income is more than, like your rent expense is more than 1 lakh rupees, so that time you have to pay extra as a PAN card of your landlord. So these are the things you need to be consider whenever you have to get a benefit of HRA. Three document needs to be sufficed to the accounts department. Like first is a rent agreement, second is a rent receipt, and third is a PAN card of your landlord number. So sometimes possible landlord might possible they will not say, like they will not share your PAN card number, but that time at the same time in a agreement, a normal agreement, it's a mandatory thing to provide the PAN number. That time you can get a PAN number from this particular agreement as well. So for getting a benefit of HRA, you have to submit three documents. Now going to next slide. Now you can see that the leave travel allowance. So what does mean? Government also like provide you that whatever expense you incurred for a traveling, you can also get a benefit out of it. So it's a really good thing. Like government also feels and thinks about our like you can say that the personal life as well. They are also providing that much exemption, like you whatever expense you incurred in terms of traveling. So let's say it's a 2 years block. So under the 4 year blocks, you can get benefit of 2 years. Like you can say that the 2021, 2022, 2023, and 2024. In a 4 years, you can get a benefit of LTA any 2 years. Like you can get a benefit of this year, and then next year you will not get a benefit, and then you can avail the benefit of the next to next year. So government provide you that the benefit, like you can travel and you needs to be travel whatever expense you incurred, you can get a benefit out of it. So let's say that the LTA, leave travel allowance, so there is a thing is also included in your pay structure. So whatever amount got deducted on a monthly basis, up to that limit you can get a benefit of LTA. Let's say some of the 3,000 rupees per month deducted from your salary, or not deducted word I can use, it's a bifurcated your salary components, and you can see that the 3,000 per month leave travel allowance has been there in your pay slip. So 36,000 per year. So now you can get a benefit of that particular LTA. But I'm giving you that some option, like you can only get a benefit of your travel ticket, maybe airfare, or sometimes now in a situation where many people do the road journey, like from Ahmedabad to Ladakh, or maybe Delhi to Ladakh, or maybe sometimes to Kulu Manali, to like anywhere you can just travel by your car or by your bike. You can also get a benefit of, but something is there, like you just justify your proof, like toll tax, your petrol bill, wherever you fill up your tank. So it should be from Ladakh or maybe between the Ladakh and Ahmedabad. So whenever you do the road journey, it's also allowable up to that whatever portion is available in your pay slip. So now you can see that the government always your by your side. Like first of all, they also provide you medical bills. Then second about the HRA. Third about the traveling expense, and fourth about the, you can say, the convenience expense. Like whatever expense you incurred for commuting from home to office, you can also get a benefit under the standard deduction as well. So now you can see that Daisy has all the benefits. Out of, she can have a taxable income of 5,80,500. So now you can see that from 7,50,000 to she can say amount, and then now taxable income is 5,80,500. Now going to next slide, you can see that the some exemption are available under the section 80C. So like many people are not basically understand the deduction 80C. Every other person and other financial person are talking about the 80C में मिलता है deduction, 80C में इतना कर ले, 80C में वो कर ले, but they are might possible they are not connect with the section. So I'll give you the basic information about the section 80C. So under the section 80C, limit should be 1,50,000. So it will cover, I'm just sharing my another screen like it's an Excel. Just a moment. Now you can see that the under the 80C option, under the 80C, you can also, I'm just going to just zoom here, just zoom here. Now you can see that the 80C, whatever options are available. So first of all, I already discussed about the Provident Fund. It's EPF. So if you already enroll EPF, then you can get a benefit up to 1.5 lakhs. There is it's a limit 1.5 lakh. There is so many options. Under the 1.5 lakh, there is one other option is PPF, Public Provident Fund. So under the public provident, if you already enroll EPF, then also you can also enroll in a PPF. But some advantages are there and some disadvantages are there. So under the PPF, you have to pay some amount on a yearly basis and you can get a benefit out of it. So let's say if you are investing 50,000 in a EPF and 25,000 in a PPF. So under the EPF, it's all the administrative work done by your employer. You no need to worry about the your payment got like credited in your account or not, your employer has paid the particular amount in your account or not. So no need to worry about that. But under the PPF, you have to pay the taxes, like you have to invest some amount in a PPF by yourself. So you have to create one passbook and go to the post office nearby your location. So but one more disadvantage is that your money got locked for the 5 years. Like you can say that for the 15 years, but it's renewable. So you cannot redeem or you cannot withdraw your whatever amount you are investing in a PPF. You cannot get it in a between the years. Like some exception are there, like if some emergency or medical emergency or maybe some marriages in your family, you can withdraw the amount, but it's restricted. You cannot withdraw your amount. So it's a PPF. But under the PPF, the interest rate should be lower compared to other options are available in the market. So for the PPF, like our senior peoples and our family members and our fathers always used to say that please deduct the PF and also invest in a PPF. I am agree with the EPF, but PPF, in my opinion, it's in a bucket. We have some another option as well. So why don't we pay and why don't we invest in a PPF? So it's a discretionary option. Like someone has many things good about PPF, but someone has some negative points about the locking period. So in a PPF, you can say that it's a partially, I'm agree with that, you can invest your PPF, because sometimes what happens, you everything you have done, but you have to save your tax. That time PPF is the only thing then is available, then you can save your tax, then and then you can invest your money. Now the third one is home loan principle. Again, I'm going back to that my statement that government always stand by you about like home loan principle. So first of all, government provide you the HRA, and then if individual earning much money and if wants to buy the house, first of all, they if individual has a first home like first home, government provide the subsidy of 2,50,000 rupees for your first home. So now just see that way, governments provide you like each and every stage of your individual, like wherever you need money or wherever you need some relaxation, government always there. So you can see that the home loan principle and also the home loan interest. So under the ATC, you can get a benefit of home loan principle. Like you can also come across your like you can say that the certificate received from your home loans provider, where you have two components. One component is interest, is a major components of your interest, and the nominal portion of your principal. So whatever amount is there, you can get benefit of to 1.5 lakh rupees. Then after ELSS, so ELSS, it should be linked with the equity link system. So here under the home loan principal and the PPF, you have an option that you can invest, but some disadvantage is that you cannot withdraw your money. It should be under the locking period, and you can also not get the as much good return in a PPF, and in under the home loan principal you have to pay, and then you can get a benefit. But under the ELSS, there is one locking period. You can not withdraw money for a 3 years. So under the ELSS, let's say if I earning and I depositing some investment 1,000 rupees per month under the ELSS, I have the opportunity to withdraw that particular amount after the 3 years. But under the ELSS, you can invest, you can get a benefit under the taxation, and you can also have an investment return as well as your capital back after the 3 years. So here it is like you don't want to pay anything about to save your tax. You have this some amount extra excess amount in your salary, you just save under the ELSS, and you can get a benefit of rupees like whatever amount is there. And very much good thing about the ELSS, you have a investment return of 12% per year. So now you can see that the 12% per year and locking period is 3 years. So you can save like you have the investment opportunity, you have the taxes and saving opportunity, and after the 3 years your money will be like almost double. So I'll always suggest that you need to be invest under the LSS, so you can get a benefit of taxation and the investment. And the next after the LSS, ULIP and the life insurance policy. So everyone taking the should be two things needs to be there in your life, like one is term plan and one is the life insurance policy. So life insurance policy, like you can also get a you can also get some life insurance policy where you can save the money and you can also return after some of the years. Some of the policy where you have to pay till the 15 years, then after whatever function, or maybe for a girl child you can say that at the age of 21 you can get the sum of amount from the life insurance. So that time you can feel the relax, like no need to worry about the financial crunches because you already invested some amount in a life insurance policy. So under the ULIP, it's a two components are there, investment per plus life insurance policy. If you can combine both in a one segment, it's considered as a ULIP. But I'll not suggest go with the ULIP. I'm giving you my opinion. It might be changed, it might be not in your favor, but I'm giving you my opinion. So don't consider like I'm giving the opinion, so it should be a final one. But you can get a research and you can get a more information about the ULIP as well. So under the life insurance policy, you have the investment option as well as your premium, your life cover option. So these are the thing you can also get a benefit out of it, and you can save your tax. Then after, so many some yojanas are there, like national saving certificate, post office FD, fire FD. So these are the things you can keep the money in a bank and keep with the NBFC or maybe another financial institute, and you can get a benefit of taxation. But the last and then like you can see the tuition fee, government also thinks about your education of your children as well. So whatever amount you pay as a tuition fee for your children, up to two children, you can get a benefit out of it. So let's say nowadays education is too much costly, but they have some bifurcation, like they are charging some tuition fee for that particular semester or particular year. So you can get a benefit out of it. So you can see that the under the ATC, so many options are available, you can get benefit out of it. Some of the are expense, some of the are investment, but you have to think and you have to eliminate some option by prioritize, like if I investing and also get a benefit, so my vote goes with the investment plus taxation. Then also one more thing in under the ATC section, like NPS, National Pension Scheme. Before some years it should be only for a central government employees, but now they also providing and give you the benefits to private employers as well. So under the NPS, you can create your own PRN. You create on your PRN login by just providing some KYC details on their website, and you can create your PRN number and NPS account, and you can invest some of the amount into it, and you can get a benefit after age of 60. So that time you can also avail the benefit after the pension in the terms of pension. So under the ATC, NPS there, LIC is there, EPF is there, PPF is there. One more thing, like you can say that under the ATC, uh, let's go back to the that slide and we just compare with the numbers. So might you relate with the things. Now you can see that the under the case of Daisy, and I'm not taking a much more amount of till 1,50,000, but under the Daisy has enrolled only 35,000, right? So now you can see that the after 35,000, Daisy has a taxable income is 4,83,500, whereas Donald has invested an expense, like you can say that invest so many amount in a up to 1,50,000. Now you can see that the now Donald has a taxable income is 6,50,000, 51,600, right? So after the deduction of ATC, you Donald taxable income is less compared to 9 lakh gross income. So before the ATC, you can also see that the UA, it stands for uniform allowance. So I am also going back to my statement, roti kapda or makan. Now the second term is kapda. Government also give you that amount as a tax saving option. Like you can say that whatever amount you incurred, whatever expense you incurred to buying a clothes, or you can say that whatever formal attire you buy for your business or buy for your like for a company or for your job, you can also get a benefit out of it. So for that uniform allowances, you have to submit the bills, like whatever expense you incurred. Let's say you buy some formals from the DMart or maybe in a big bazaar or maybe in a any other place where you can get a bill out of it. So for that you have to submit the bill to the accounts department, and you can get a benefit of rupees whatever amounts in your pay slip. Let's say 1,000 rupees per month, then 12,000 rupees per year. So you can get a benefit of 12,000 rupees tax deduction option under the uniform allowance. So now you can also understand that government always is there to give you that much comfort, that give you the so many options, then after you have to pay tax. So you can see that the under the uniform allowance and under the ATC section, Under the ATC section, you have to provide some documents to the accounts department, because accounts department will have a responsibility to check each and every document, whatever investment you have done, whatever LIC, life insurance policy you have taken, each and everything you need to be checked by the accounts department, because it's their responsibility to provide the right information, like what wherever the notice will come, or maybe whenever the assessment will be come from the income tax department, that time these are the details is available for them to surprise the whatever they have deducted your tax or not, right? So now going to the next slide, it's a medical insurance premium. Like normal people can incur some, like you can say that in an emergency have to pay so many tax, like so many amount to towards to medical. Or nowadays after the corona, everybody are more concerned about the health, so they also have taken a mediclaim or maybe medical checkup on a yearly basis, and many insurance companies have started medical checkup on a monthly basis or with a free of cost. So you can get a benefit of paying a medical insurance premium towards to the like you can save your tax. Like you can say that the under the medical insurance, some of the medical checkup is required, pre checkups, like you can say the pre hospital and the post hospitalization after 30 days. So whatever expense you incurred for that towards to medical, you can get a benefit out of it. So if you are paying the taxes like yourself and the spouse, so let's say limit up to 25,000. So you can save your tax up to 25,000 by paying a medical insurance premium to the service provider, and you can also get a benefit. And sometimes possible that if your parents is dependent on you and you are paying their premium through your bank account, so you can also get a benefit of your parents as well. Or so you can get a benefit of rupees 50,000 for a senior citizen. For a normal it's a 35,000. So you can get a benefit of by paying an insurance premium and get a benefit out of it. Now you can see that the under the Daisy case, my taxable income is 4,83,000, because Daisy has not invested or not incurred any expense towards to medical expense, whereas Donald has a pays a medical premium. So now the Donald has a taxable income is 6,42,000. Now going to next slide, higher education loan interest payment. If you haven't a chance to done your complete your study, or might possible that you are paying some taking some educational for your for your children, then and then you can also get a benefit out of it, like you can get a benefit of educational loan for employer or maybe your spouse or maybe your children. So you can also get a benefit. So under the educational loan, government also encourage you that you can get a benefit and complete your study and upskill your skills and get a degree and get a good job. So these are the things you can also get a benefit out of it. Then after recently introduced by the electric vehicle, and why they are encouraging, because many people can purchase the electronic vehicle and get a benefit in a simply way. They also provide you some subsidiary, and then also provide you the some benefit under the taxation. So maximum allowable amount is 1,50,000. So let's say if you are purchasing an EV machine, you have the petrol, saving a petrol cost, convenience cost, each and everything. Then after you have the benefit to save the 1,50,000 if you buying EV vehicle, right? So now you can just think about that. Government has provided you multiple options where you can save your tax. If you can, then just save your tax by just providing the documents or investing some amount, or some portion you have to incur some expense. But some of the portion you incur the tax, incur the expense, but also you have the option that you can get a benefit of, you can reduce your tax. Like many people are misguided by the tax avoidance and tax evasion. Tax avoidance, it should be that whatever amounts and whatever options are available, you can get a benefit out of it. But tax evasion, it's an illegal way. So I will not talk about the tax evasion, and always encourage to think about as a tax avoidance, because in a way, in a view of the government, they have so many policies, and though so many options are available for you to get a benefit. So we'll not talk about the tax evasion, we'll discuss about the tax avoidance. Going to next slide, it's a donation. So in a corona period, many people have done a charity through PM Care Fund or some other, you can say keto, or maybe some other private donation parties are there. So if you feel that, if you are if you are financially strong and financially sound, and you have some excess amount and you want to charity, that time also government helps you that please do the charity, will help you that by saving your tax. So you don't want to pay whatever amount you have done for a charity. So now you can see that some of the donation parties are like in a segregated in two ways, like 100% allowable and 50% allowable. So you can see that whatever receipts you have under the charity, they are clearly mentioned with the PAN number, and also they have mentioned the, you can say that the in a which category they are falling into. Like some of the are in a 50%, some of the are in a 100%. So for that you have to submit rent, submit the charity, like you can say that the receipt of that particular donation, or the PAN number of your charity. Because why I'm asking this, and why accounts people are they are asking, because many times there some people are doing some fraudulent with the documents, they are not providing the perfect one. So that's why for the cross checking we are asking the PAN number of charity, donor name, or maybe donation party name. So after detecting the donation, now you can see that the donor has already get the benefit of donation, have done the charity. Now donor has a taxable income is 6,37,000. So in a Daisy has not avail, and Daisy has not doing any charity for that particular financial year. So taxable income for a both, like you can say that in a end of the end of the slide. Now going to the next slide, interest on a saving bank account. Might possible that our parents used to force us for the fixed deposit, and we have done some fixed deposit and you get the interest on it, or maybe some of the portion of your salary amount like kept remain in your bank account. So you will get the interest on your saving bank account. So you don't want to pay the tax on the particular amount up to 10,000. So till the 10,000 you don't want to pay any tax on that particular bank interest. So now you also can see that a government, like I'm not giving more praise about the government, but you can see in the different way, you will found that the so many things are available. I can save my tax just reporting the income honestly and get benefit out of it. So going to the next slide, housing loan interest payment. In a before slide I already discussed the home loan interest. I'm again going to give you the more clarity about the home loan interest. So now you can see that under the home loan interest and home loan principal covers under the ATC section, but interest covers in a different section. Here I'm not saying the section because it's not relatable to you, because many times you think that the section, so I'm not saying any section, but I'm giving you the basic idea about that housing loan interest payment. So you can see that how whatever amount you are paying towards to taking a home loan, government also to tell you that you don't want to pay tax whatever amount you paying towards to your home loan interest. So now you can see that if you are taking a 50 lakh rupees loan for a 20-year tenure, then you can get a benefit of is 2 lakh per year, So 40 lakh rupees you don't want to pay tax towards till the tenure of your home loan. So now you can see that if you are taking a home loan, initially you find that it's very difficult to take a loan and take a home, because nowadays it's very much costly. Like nobody can think about like to purchase a new house. In our metros, it is very difficult. So that's why they are encouraging like whatever amount you are spending towards to home loan, we will give you the benefit up to your interest as well as your principal. So now you can think about it. If Donald has taken a home loan and he has a interest amount for that particular financial year is 80,000. Now you can see that the taxable income of Donald is 5,47,000. Right. Going to the next slide. Deduction of the person with disability. I'm not taking much more time to discuss the disability, because if someone in your family, it's not I'm not saying that it's a good thing, like because it's a very much you can say that the it's a I'm not discussing about the more thing about the disability, but someone in your family or maybe you can get a benefit of disability in your tax saving option. Going back to the final tax calculation, now you can see that the under the old regime, Donald has taken each and every option to save their tax. Now you can say Donald has a taxable income, or maybe you can say TDS. I am giving the much more detail about the TDS. TDS is what? Is a advanced tax. Like you can say the whatever amount you will earn in this financial year, employer will deduct your TDS. So let's say employer will deduct your TDS 30,000 rupees per year, but end of the year you have invested and you also provide the benefit like provide the receipt to the department, and while you're filing the return you have a excess amount of 30,000 in instead of 22,000 your taxable income. So whatever remaining amount you will get the refund from the income tax department. So TDS is the very good thing. Why I'm saying that? Because end of the financial year, everybody have a one thing in their mind, like it's just starting of the financial. We will discuss and we will do the financial planning later. But I always insist and suggest that whatever tax planning you have, just pre-plan before the time comes or time occurs where you don't have a time or don't have a money that time. So you can also simply say that the if you are came in a tax slab structure, 1,000 rupees TDS deducted from your employer, then you can see that the you don't want to make a more complex structure like in a TDS. Just simply inform the department, like in accounts department, please deduct my 1,000 rupees TDS. Why I'm saying this? Because end of the financial, like in a Feb or March, many people are facing the same thing. I don't have that much of amount to pay the tax, and my salary I'll not getting as much as salary because I have taken a leave, and these are the thing I am facing. So I always insist that wherever you have the option, invest or provide the documents to department before the time and pre-plan your taxable income. Now if we discuss about the daisy, you can see that under the daisy have a taxable income is 4,78,000, but also she doesn't want to doesn't want to pay any single amount. Why I'm saying this? Because if your taxable income up to 4,99,000, you don't want to pay any single amount, because government will give you the rebate of 12,500. So you can save your tax up to 12,500. If your tax should be like till 12,500 under the calculation as per the income tax lab, you don't want to pay tax, because till 4,99,000 if your taxable income is there, you don't want to pay any single amount to government. So these are the thing you need to be consider, and I'll give you the some glimpse about the tax calculator and the basic idea about the Excel. Just a moment. Now you can see that the tax calculator, some people are aware about this type of appearance because Krina has set some tax calculator to each and every individual where tax liability comes into the picture. For that tax calculator, if it is required anyone, then it's a very simple way. I'll draft it and I will create it. So you have to just put your salary amount. Like if I get basic salary at 25,000, HRA is 12,500. Some of the other portion I getting LTA, medical, HRA, uniform allowance, whatever you receive in your pay slip, you just put it over here. And then end of the slide, you can say that you can think about it like you can have a, don't need to scratch the head. You have the tax liability about 1,846 per month, because here you can see that the remaining month is 12. But if I say its remaining month is only one because February is already done, then if I see the one, then you can see that the I have to pay 22,152 for that particular financial as a taxable income, right? But under the new scheme, I have to pay 39,000, right? So what I'll do is I'm give you the basic understanding about the whatever I give you the explanation through the PPT. Now you can see that if I'll zoom bit and then you can understand. Now you can see that under the exemption 10 to 17, you will see the HRA exemption, right? So going to up for that particular field, you can see that the HRA amount is 12,500. So till the 12,500 you can get a benefit, but whatever rent amount is there, you have to put it over here, right? I have mentioned the 15,000 per month I'm paying the rent. And now you can see that under the HRA exemption, produce means whatever amount I'm getting from the employer is 1,80,000, 12,000 into like 12,500 into 15, it's 1,80,000. But I have the pay, like you can say that the rent payment and the I already give you the details about the three condition like 40% and 10% of the basic salary and the whatever amount you pay. So don't want to mathematics, just see that the how much you get the benefit. So out of 1,80,000 you get the benefit of 1,20,000. Then after the other exemption like gratuity, if you're earning or if you're getting gratuity from your previous employer, so you can also put it over here. Children education allowances, LTA, uniform allowances. So whatever amounts you have, you can just put it over here and check the taxable liability. You can also go back to the medical insurance premium, yourself, spouse and children, as well as your parents. Some things are there: education loan under 80E, donation approved, rent deduction, bank interest, and the last one is the ATC. So you can also get a benefit of these are the things. One more thing I skipped by the Sukanya Samruddhi scheme. If you have a girl child, then I always suggest please invest your amount in a Sukanya Samriddhi scheme, because at the age of your child 21, you will get the money and you will get the like in a Sukanya Samriddhi scheme. They are providing the 8% interest. Like if you are paying a nominal amount 50,000 rupees or 10,000 rupees per year, at the age of 21 you will have a handsome amount and you can complete or finish up your function of marriage function of your child, and by the time you can also get a benefit of taxation as well. So these are the options are available, you can get a benefit out of it. So you can just put your amount as well, like I'm just, you just fill the yellow numbers and the other numbers you cannot editable. So whatever amounts you have, just put it over here and then check your tax liability, how much tax you have to pay. So these are the thing you can check. So I'm just sharing another screen, just give me one moment. If I talk about the this much thing, just a moment, I'll share my screen. Now you can see that I have taken the annual CTC of 16 lakh. Then after Provident Fund deduction, HRA deduction, professional tax deduction, children education allowance and children hostel allowance is also available. Then after LTA, my net salary would be 10 lakh 42,000. Then after I getting up 50,000 as a standard deduction, then after 2 lakh rupees like my home loan interest, then ATC 1 lakh 50,000. NPS employer contribution, like what if I always like I give you the suggestion to the HR department, like we can also have the one components in our salary like NPS. If employers provide you some benefit in terms of like bifurcating the allowances into the NPS, like there is no cost behind it, just need to bifurcate the salary structure. So that time you can also get a benefit of 10% of your basic salary. So you can say that my net salary is 10 lakh 42,000. So I can get benefit out of 1 lakh, like under the ATC I have benefit of 1 lakh 50,000. On and above that I can have a benefit of 1 lakh 4,200 rupees. So if employer provide you the benefits in your salary slip, so you can avail that benefit. And I also initiated and provide you that suggestion to department, might possible that will available to the next financial, or maybe it's under pipeline, I'm not sure about it. But I say that these things to be covered in our pay slip as well. Now you have the medical insurance premium, self and spouse 25,000. If you are paying for your parents, then your taxable income is 50,000. Interest on education loan, interest on saving bank account. Now you can see that after getting all the tax deduction option available into the market, I'll get the each and everything. Now you can see that my taxable income is 4 lakh, but also I don't want to pay any single amount to the department. Why? Because I have a tax benefit of 12,500 rebate. So I don't want to pay any single amount if my taxable income is 4 lakh 99,000. So these are the things I explain. I try to be give you my best. And one more thing I'll show you, just a moment. Now you can see that some of the survey has been done by the some private, like you can say that from the Google I got the data. Under the section ATC benefit, ELSS, PPF, NSC, 5-year taxing, and the some other yojnas are there. Under the ELSS, type of investment is equity. Under the PPF, it is a fixed income. NSC, it should be a fixed income, and the other as well as a fixed income. Under the ELSS, locking period is 3 years, but at the same time, if you are planning to invest some amounts in some option, that you can see that under the PPF, lock-in period is 15 years. Under the NSC, 5 years, and the FD 5 years, and SCSS it's a 5 year. Under the ELSS, no maximum limit. You can start by the 500 rupees minimum amount. Under the PPF, you have to at least pay 1.5 lakh per year. NSC, no maximum limit. 5-year tax saving FD 1.5 lakh, and SCCS maximum invest is 15 lakh. So under the PPF, NSC maximum limit is 1.5 lakh. Now going back to the next slide. Risk factor and the interest rate. So now you can see that if I invest in under the ALSS fund, my average rate of interest I'm earning on my investment is 12 to 15% per year. It's too much, because let's say discuss about your FD rate is a 4 to 5%. Then again you can get the benefit of your taxation, as well as you can reduce your tax, as well as you can invest your money and you can get a benefit out of it. So it's a like double bonanza, you can say that. You don't want to incur anything above, because you are earning, you are investing, you are getting a benefit, and you can also get your capital return back after 3 years. Under the NPS scheme, interest rate is 8 to 10%, and lock-in period is till 16 years of age, because it's a NPS, it's a pension scheme. So you can withdraw your fund at the age of 60, or maybe, and then after you start the pension. Under the ULIP is the same, 8 to 10%, lock-in period is 5 years. Tax saving FD 7 to 8%, 5 years locking, and the risk factor is low, because FD providing the low interest rate and your risk is low. In terms of ALSS, your interest rate is high. By why risk factor is high? Because they are investing your fund into equity. So equity is always, you can see that the under the high risk factor, right? So these are the thing. Under the Sukanya Samruddhi Yojana, you get a benefit of 8.4%, and the risk factor is also low. So if you have a girl child, so I insist that please invest your fund into the this particular Yojana, because you don't want to face any risk about that particular investment, right? Going back to the next slide, Mediclaim benefits under the ATC, and I'll discuss the ATC and now Mediclaim benefits. Maximum deduction below 60 at 25,000, and maximum deduction 60 years or older 50,000 rupees. Under the 25,000 and above the 25,000, if you have done some medical checkup, you can say that the normal routine checkup, you can also get a benefit, but you have to provide the checkup slip to department, accounts department, and you can get a benefit out of it. So this much options are available in the market, and in your like there is a no eligibility criteria, just to just invest and pay that particular amount, and you can get a benefit. So this is the things I have like noticed that many people needs to be understand. So like we can start, if anyone have a question about the income tax, or about the some portion I missed, or my page is too fast, so I can repeat again if you want to understand again. Then like we can start the like you can say the Q&A session. Whatever knowledge I have, I'll try to give you my best answer about it. But if I feel that I'm not able and not positioned to give you the answer, I will write back to you through the HR and give you the answer on that particular whatever question you ask. Thank you.
Thank you, Parin. Thank you so much. So anybody has any questions, please ask Parin. Or any doubt, if you have, you can ask your questions. Or if you want to know anything else regarding your, investment or something like that, please ask.
You can also say that the like my case is this, my case is that, but I am not understanding this thing very easily. So you can also have come across some financial jargons or technical jargons. You are not understanding this thing. You can also ask same thing as well.
Right. Any question, guys?
No, Prin, I would like to thank you for this wonderful session. There were quite a lot of new things which I learned today from this session. I wasn't aware about the uniform allowances and all, and the process which we can, claim it in the future. But yeah, after this session, I'm quite sure that whenever I file my next ITR or like that process, so I would be having more clarity. So as of now, I don't have any questions, but I really thank you for your valuable time. It was a long session and you gave it without any pause. So thank you very much, Praveen.
Thank you so
Thank you,
much,
sir.
Karan. My main objective is always there. If through me you can save your 1,000 rupees tax for this year, maybe in the next year, I am the more than happiest person in the in a MSM. Like through me you can save your tax.
Right.
So like I'm very glad that everyone can join, because of if I feel that what happens, like if somebody's are not aware about the tax, so I initiated and with the Varun like giving me opportunity to share my knowledge. So like I'm always happy to share my knowledge in a wherever I have some expertise, you can say that. Thank you for everyone joining the session.
Thank you. Thank you. Anybody has any questions? So please let me know. Otherwise, you can write to me as well, right? You can write your queries in case if you have questions, write to me and I will share your queries, questions to Parin, and we will try to help you out in whatever possible ways we can, right? So thank you, everyone. Thank you so much, Parin, and hope to see. And if you have any suggestions, right, any sessions that you want to, you know, if you want any kind of sessions, any topics, please write to me, right? I hope you all have my email ID. So please let us know, guys. So that is all for now. Thank you so much. Thank you, everyone. Bye-bye. Take care. And we will share the tax lab with you. Parin, you do share with me and I will share with all the participants,
Right.
right? So that I can help
Be
you.
appreciated. Yeah. Thank you, Pooja.
Yeah.
Thank you, Parin.
Thank you, Karan. Thank you so much. Thank
Thank
you,
you.
everyone.
Thank
Thank
you.
you.
Thank
Thank you.
you, Parin.
Bye-bye. Thank you. Bye-bye.
Thank you.
Thank you.